traders, this is Blake Morrow with ForexAnalytix, and you're listening to the week ahead video for May 26, 2019. Hope everybody's having a great weekend. Here in the United States, this is the Memorial Day weekend, so we will be celebrating that going into Monday, and so Tuesday is when we actually start back our daily FACE webinars. But it's going to be a busy week regardless. We have European elections and we have some central bank activity happening this next week. But before I get into all of that, I've got to mention that we have our Memorial Day weekend discount that's actually happening just from May 24th to the 28th. So you have a couple of days to take advantage of this as you're listening to this webinar, especially if it was just released. We only do special offers a few times a year. When I say a few times a year, that's not 15 times a year. That's like 2 to 4 times a year. So this is going to be a special discounted offer for those of you that are looking to be part of the ForexAnalytix community. You can see it's buy 1 month, get 1 month free, a 20% discount on semi-annual, 25% discount on annual subscriptions. If you were waiting to be part of the ForexAnalytix community, this is the time to do it. And even though this isn't our best offer that we give throughout the course of the year, I think the best offer we give is at the very beginning of the year. It's still a great offer, and you can always upgrade, 6 months from now if you want to. So don't wait. Go ahead and get started and click where it says sign up today. And when you do that, make sure you don't download the mobile application. This way you have all of our analysis, updates, chat room, our private chat room for only ForexAnalytix community traders. You can download all that in the App Store, Google Play Store, and you have all of our analysis and everything else at your fingertips. Okay, enough about that. Let's talk about what we saw going into the end of last week. And let me get rid of the data flash here. That's included with ForexAnalytix. I'm going to move that. At the end of the week last week, we saw some dollar weakness. And in my opinion, we saw a pretty key reversal of the dollar index. And let me pull up the dollar index here. We saw a pretty key reversal of the dollar index going into, this is Wednesday, and we're still updating the charts over the weekend, but I want to show you how significant the double top is on the dollar index. Matter of fact, let me go ahead and pull it up on my charts that I have here. And you can see we are, potentially setting up a double top, and we are at the bottom of this, this support zone. I like to call it this support resistance zone. You can see the high here, low, high here, high here, high here, and there, and there, and you can see that's just a big zone, a big support zone. We're testing the lower end of that support zone right now. And the fact of the matter is, in my opinion, if we break this uptrend line, you can see it right through here. We break that uptrend line, we are at risk of setting up a double top in the dollar index. Now, the reason why this is a big deal, in my opinion, is because you have currencies that are showing some signs of a reversal. One of the key currencies in my view, a couple key currencies in my view, are some of these commodity currencies. Take a look at the Kiwi, and let's go over to the daily chart of the Kiwi. We came out of this is a descending wedge. Okay, descending wedge. Popped out of that descending wedge. It looks like, in my opinion, we're heading back towards the 200-day moving average. Or you can see this big, resistance zone that's going to come back into play. That all is around the 67-cent level, roughly. And we're at 65.50. So 65.50 to 67 cents. That's 150 pips. But for the Kiwi, the exchange rate, that's a really big percentage move for this particular pair. And on top of that, aside from we have the RBNZ financial stability report on Tuesday afternoon, which is actually Wednesday morning in New Zealand, and we have Australia, New Zealand business confidence. We don't have any central bank activity, so there is room for the Kiwi dollar to continue to appreciate coming out of this descending wedge. Now, if you take a look at the Aussie dollar, very similar type of situation in the Aussie. The Aussie has also found a lot of support at the 78% retracement. That's from that spike low back in January to the highs following. 78% retracement. We are making a higher low longer term, and you can see how if we just break above like 69, roughly 69.30, 69.50, we could rally back up towards 70 cents, the big figure. That's another 70 pips from current levels. So again, we're seeing a lift in some of these commodity currencies. You take a look at the Canadian. Excuse me, my allergies are bothering me a little bit today. Here's the Canadian dollar. Okay. Now the Canadian, we have not been able to break out above 135. And if risk appetite, and I'm going to talk about risk appetite here in a moment, if that continues to improve, which I'm assuming it will, and again, I'm going to go back to the S&P chart here in just a moment, that could help us come back down below 134, and back towards 133, towards this channel support. You can see this nicely, very well respected channel support. The lack of ability of the US dollar Canadian to rally really is probably got a little, some of the longs a little, concerned. And the fact of the matter is, if we break below this 133 level, we could really challenge 131. So, this potential, I think, is great when you look at the S&P. Let me go over to the S&P, and I'm going to go over to my charts really quick because I want to show you something. All right, the S&P, we've been talking about this big double top false breakout. That's why you see this big circle over here. Okay, that's because I was highlighting the last couple of weeks that double top false breakout, and it has led to a breakdown, or at least a pullback. Now, I still think this double top in the S&P is significant. All right, I still do. However, let me draw this out for you. However, I still think that we don't have to go straight down from here. I think there's a risk of, let's just talk about the next couple of days or the next week, that we get a little bit of a bounce before resuming the downtrend. Now, why do I say that? Well, specifically, if you look at the 2800 level in the S&P, and let's zoom in a little bit. Let me move this over. And you can see this is a big resistance, It's held us up, held us as resistance quite a bit. We finally broke above it. We've come back down and challenged it successfully. We've come back down and challenged it successfully once again. We made a slightly higher low, which in my opinion suggests that we could still bounce here. As long as we're above 2800 in the S&P, I still think the risk is higher, at least for the next, week, maybe a little bit longer than that. So if that is the case, then you go back to, these commodity currencies. You go, well, if we get a bounce in risk, the Canadian currency could continue to strengthen. Crude oil has been strong. We've had a nice pullback this last week. Okay, let me see if crude has been updated. Our team's still updating this throughout the weekend. Yeah, crude's been updated. Let's go to the basic technical analysis. It may be, red right now, and you can see that there's been some selling, but, we're also at support. So crude could really, bounce here at the 57.50 level, back up towards 60 going into this next week. I'm not sure that risk appetite is going to completely fall apart here. And if the S&P can hold 2,800, crude oil can hold up. Yeah, you could see those commodity currencies like the Canadian dollar firm up a little bit, the Kiwi, the Aussie. I think there's room for a bounce. Okay, and if you look at that dollar index, again, I'm going to reference the dollar index. You have this double top. We break through this support here. I mean, you're talking a pretty decent move lower in the dollar index. This double top starts to play out, we're talking a move which could take us back down below the 200-day moving average, maybe below this trend line support here, okay, and maybe back towards 96 on the dollar index. failed breakout attempts, double tops. It's all possible, especially like I said, if risk appetite can hold up. That means if the S&P can hold above 2,800. Look, the dollar is going to perform better at this point in time, in a risk off environment. But as long as the stock market is not falling apart, that could give the basis for the dollar index to pull back a little bit. All right, and that's what I'm thinking about right now. Now, speaking of risk appetite and risk aversion, let's talk really quick about the U.S. dollar, Japanese yen. Uh, Donald Trump is in. Matter of fact, as I'm speaking right now, he is in Japan, negotiating with Japan on trade. While President Trump is in Japan, and remember, Japanese U.S. relationship right now is pretty strong. And if you remember, Abe had given Donald Trump a golf club. I think they're out. They're playing golf today. It's Sunday. They're out playing golf today. They have a good relationship. That means that chances are the U.S. dollar, Japanese yen is probably not going to fall apart this week. We do have this bear flag. You can see a nice little bear flag trying to play out. But as long as we hold above 109, we can still bounce around. I could actually see let me pull up the dollar yen where I can draw this out for you. Even though we have this like bear flag that is, it's trying to play out, and below 109, then things open up. So you have to imagine if we break through 109, we are going to be traveling to 107. But I wouldn't be surprised because, you know, you know, Donald Trump and Abe are hanging out, enjoying each other's company. We might end up just consolidating here for the next few days before finding our next direction. So as long as we stay above 109, I don't think you need to be too bearish to the dollar yen. We get below 109, that's a game changer. Then you have to start looking at all the other yen pairs, like the euro yen, pound yen, Aussie yen. You have to look at bearish developments there. And then also, my assumption would be, if the dollar yen is breaking through 109, that means the S&P has broken below 2,800. Obviously, we break below 2,800, dollar yen's below 109. It's a game changer, and you have to start looking at those commodity currencies as the bounces are going to be fairly limited. But as of this week, remember, it's a holiday week in the U.S. There are some holidays for European banks on Wednesday. And the only central bank that's meeting this week is the Bank of Canada, which is on Wednesday morning. And chances are the Bank of Canada is going to be on hold. They're going to be data dependent. So, I'm just going to be watching mostly the S&P, queuing off of that. And as long as the S&P is above 2,800, I think that the commodity currencies still have a risk to bounce. Again, below 2,800 in the S&P, dollar yen below 109, that becomes more of a game changer. All right. So guys and gals, remember, we broadcast throughout the course of the week. We have a free broadcast. It's called the Face Webinar, hosted by Dale Pinkert, or Forex Stop Hunter on Twitter if you follow him. We have such great interviews throughout the course of the week, and you get live analysis not only from myself, but from the rest of the team. So make sure you tune in there, because this is just the week ahead video. You catch me on Sundays or sometimes Saturdays, but over the weekend, then you may not hear me again for another week. But if you want to hear my analysis every day, because obviously things are changing throughout the course of the week, you want to hear myself and the rest of the team the rest of the week, it's a free webinar. Come in and join in. And guys and gals, I want to thank you for joining me today. If you found this video helpful, you think it's going to help you going into this next week, you're listening to us on YouTube, click the thumbs up button. That makes us always feel good that you like this video. Make sure you subscribe, so this way you don't miss any of our videos as we release them throughout the course of the week. We do have we have a couple webinars. Well, actually, we have one new webinar that you can listen to throughout the course of the week. It's the New York wrap-up video by Paul Franco, about an hour before the North American session ends. He hosts a 15-20 minute video just kind of preparing you, updating you what happened throughout the course of the day, but really preparing you for Asia. That is a free webinar, and it's for any of you guys to listen into. So make sure you tune into that as well. All right, guys and gals, my name is Blake Morrow. I hope you enjoy the long weekend. If you're in the United States, I hope you have a safe and fun Memorial Day. I have family in town. It's going to be nice. We're going to have a nice little barbecue at our house. I hope you guys enjoy it. We'll talk to you next Sunday or next Saturday. Have a great remainder of your weekend. My name is Blake Morrow with ForexAnalytix. Talk to you soon.